Let me be very clear on a few things. Just because we love and buy Baba doesn't mean you should. But if you are worried, if you own this stock and you are worried about delisting, you have come to the right place. We will bring our thoughts on Alibaba, on NIO, on other Chinese companies, and the possibility of getting delisted either by China themselves or the stock exchange like Didi did last week. We will give you your thoughts from two gazillionaires, Paul and Mo, who own multiple businesses. They've been business owners for 20 years, so they understand the concept of growth. And we will show you our thoughts on Alibaba, the company itself, and what will happen to us as stockholders if this stock gets delisted. Paul is here to fondle you in these times of need, so I give you the seer of seers. He has a PhD, an MBA, a degree in finance. He has...
I have an MD.
Yes, he has a WWF. He has all of these. Paul, Gabriel, give me your thoughts.
So first off, guys, follow us on Instagram, Everything Money Investing, and then also follow our personal accounts because we have cute photos. So
yes,
first off, go blue. Secondly,
no blame.
So the
congrats, by the way.
Thank you. The biggest issue we have with the Alibaba situation is I think there's a misunderstanding of what happens with delisting. And just to make sure everything I read on the internet was accurate, so I'd read on the internet a while back that delisting doesn't mean the company's you lose your money. It means you can either trade your shares in for cash immediately or get the shares in a foreign exchange. But in this situation, my understanding is it'd be the Hong Kong exchange. So I decided to reach out to Merrill Lynch, and Mo decided to reach out to Charles Schwab. My money's at Merrill. This is an email I got from Merrill Lynch, my office. They said, Paul, what would happen is this. If it got delisted, you'd be given the option to either take the cash or get the shares in Hong Kong. And if you got the shares in Hong Kong, the biggest issue you'd have is liquidity. If you sold the stock in the future, it might take you 3 to 5, 6 weeks to get the money into your account here. That's the biggest issue. Now, I know for a lot of people out there, that's a very troublesome issue. For me, not at all. Mm-hmm. Zero. I'm like, okay, as long as I own the company still, I own the stock at the same valuation, I'm fine with that. Or in some sort of the same valuation. I'm okay with that. Mo, what'd you find from Charles Schwab?
So Schwab gave me 3 scenarios. So delisting takes 1 to 3 months. Didi has even come out and said this is going to be a long process. So in that 1 to 3 month period as the delisting process is going on, you still own the stock on the New York Stock Exchange. So you can buy, sell, do whatever you want in that period. That's option 1. Option 2. You move over to the Hong Kong exchange in this instance, and you do not select keep my shares. So what's going to happen is they will say to you, okay, we are going to sell your shares at a price and a time, and we're not going to tell you, and eventually you're going to get the money into your account. It's probably going to be 3 to 5 weeks. The last option is you get the shares on the Hong Kong exchange. You have to select that you're going to keep those shares, and you get the shares on the Hong Kong exchange. Nothing changes. Now the only difference is you cannot go on a computer and type in the trade. You're going to have to call the global desk, and they're going to have to execute the trade for you. There are additional fees going on with it. The Hong Kong exchange is going to charge you some basis points, and the U.S. will also charge you basis points. So it's a little more costly, but you have the opportunity to keep trading those things, so you're going to keep the stocks.
And the benefit of all this is not all brokerages will allow you to do this. Yep. We've heard from a lot of our Patreon, a lot of our Everything Money software subscribers have told us that they called, when we advised them, call your brokerage. A lot of them said, hey, I called my brokerage. They said it's automatically converted to cash and I can't get the shares. Okay. Guess what's going to lead to? That's going to lead to a lot of selling. That's going to lead to a lot more downward movement in the stock price. And this downward movement we've seen so far, to me, has been driven by the market's fear of what's going to happen if there's a delisting. Do I think there's going to be a delisting? I'm actually now in the camp of there probably will be one at some point in the future. When? I don't know. Unless there's some, but the point I'm making is I immediately, upon hearing this news, sold puts at $75 for January 21st. I got paid $3.10 to sell a $75 put. What this means for those of you who are new out there is this allowed me, somebody paid me $3.10 for however number of shares per share to force me to buy the stock if on January 21st of 2022, a mere 47 days from now, if the stock is below $75 a share. I was paid 4% for the next 47 days.
Just to sit and wait and be patient.
Just to sit there and wait and be patient to buy a stock at a price that I love.
Yeah.
Let me put this all in layman's terms for you folks out there. As Paul has stated before, Paul, we get a lot of hate and some comments about, boy, you guys told us to buy Baba. Congrats, you idiots, yada, yada. The point is, if a company comes through your sweet spot as a value investor with these growth numbers and this plummet of a stock price, the people like us in this room will be buying this company, regardless of name, 100 times out of 100. This is the definition of buying with a value investor's mind. And so if you're freaking out, you might not be ready, Paul, to be a value investor.
Just like investing is just a numbers game like everything else. I was reading a book today, and I made a few good minutes today about it. Guy Spear wrote The Education of a Value Investor. I heard about the book. I'd owned it. I hadn't read it yet. And then William Green in our interview said something about it. He said what was amazing to him was how many quote unquote value investors out there in 08 and 09 when the market crashed, they exited all stocks. Scared. I get it. I was worried about Alibaba. I'm like, man, did I just miss something big? Why is the market? I mean, this is a very big drop. I got worried. So what I did more research. Every single time I researched more, it actually made me feel better and better. I'm like, oh, it's actually better than I thought. Literally every single time Mo and I would talk, we're like, wait a second, this is actually better than I thought.
Our conversation started out like, okay, did we screw up here? And then it just kept getting better and better and better. And now it's like, maybe we should be buying more.
And that's what I did. I mean, so the whole goal here is, as Seth said, and I always say, if we have 100 situations like this, I'm buying it 100 times. And guess what? 20% of the time I'm going to be wrong. And Alibaba, I could be wrong on. But that's why when I hear people say to me, Paul, 10% of my money is Alibaba, I'm like, why is 10% of your money in Alibaba? I'm 2 or 3%. I'm 2% trying to get up to 3%. Guys, it's still about a numbers game. Just like if you're a baseball player and you know that if you split can you give me a blank screen, Seth?
Sure. Well, thanks, Paul.
Okay. Let's say in baseball.
Oh, this is perfect.
You have 9 quadrants. That's what they teach you. And your coach comes to you and says, if it's here and here, you're going to bat 434. If it's here and here, you're going to bat 210. What does this mean? It means every pitch that comes in here, you better effing swing. And you're still going to get out 55% of the time. But the point is, this is what wins for you. Just like Alibaba. If I feel like Alibaba has a 70% chance of making me money, I'm still going to have a 30% chance that I still get struck out on that pitch. So this is a great point, because this is what Warren Buffett talks about. He talks about you should have only 20 punches in your punch card for investments in your life. And being an investor is like being a batter at the box. With infinite pitches, you can just let them fly by you waiting for the exact right pitch. I view Baba as a very, very, very good pitch. I'm always apprehensive to say this is because there's no such thing in the world. I heard Charlie Munger once say that they're never wrong, and I'm like, man, that's pretty confident to say. But then again, in real estate, I always feel like I'm not wrong in real. Like I look at real estate deals going, when I do a real estate deal, I feel very confident in it, but I'm still at 100%. I look at Baba going, I wish I had 100 Babas to invest in. That's why I look at Baba. I wish I had 30 Babas to invest in because I want to have 3% of everything in there. So,
and to be very clear, folks, let me straighten this up for you. There are videos of us throughout this year saying Baba at 300 was too high. We're not even looking at it. If this falls in half, which viewers told us was crazy. Well, no,
hang on a second.
Go on.
We did not say that. What we said was, if you're concerned, I thought Baba, if you believe the numbers out of China and the growth rates, it made sense at 300. I still do believe that. But I was worried about the information coming out of China. Then I changed it when I heard Charlie Munger bleed all the numbers out of China. I said, okay, now I'm comfortable. I got lucky. I probably would have been a buyer of Alibaba at $300 a share, probably at some point. And guess what? I still go through the emotional thing of my basis in Baba is way higher than it is today, 120. I still sit there and go, okay, I believe in this company. I would have dollar cost average all the way down. And it would have been hard to see the stock go down and down like it is now. At the end of the day, if I believe my philosophy of this, the stock could go to 80, 75. I don't know where it could go. But the point is, I'm happy with the shares I bought, and I do believe the stock is worth way more in 5 years or 10 years than it is today.
Mo, what are your thoughts?
So I find it funny that the stock price keeps falling and falling, and everybody keeps panicking and panicking. But aside from the word delisting, what has changed?
Nothing.
Nothing has gotten worse in the company. Nobody has said that there's fraud. Literally nothing has changed in the company. And I think this is what a lot of people are missing. They're
One thing has changed.
What's that?
It only grew 22% instead of 25%. That's
it.
And people, I think, use that as an excuse to go sell it off because of these other issues with delisting.
So when you think about it, just like, guys, when you calm down and think about it, and there's nothing that really changed. And also, I think that we need to look at this from a Chinese investor's perspective. Yes, everybody in the United States is upset maybe about delisting. I bet in China, they're pretty damn happy about it. So yes, we might be mad about it. Well, I'm not, but we might be mad. But over there, they might be saying, yes, this is a great thing. We saw what happened with DD pre-market. They were up 15%. Now, granted, it fell, but they were excited over there that it was getting delisted from the United States because that is better for them. It's more stability for them. One less thing that they have to worry about, and that's one big thing that they have to worry about.
But I still don't think long term Chinese companies are going to be banned from being. I still think there's a good chance that Alibaba doesn't get delisted. It's about what the issue at hand is about the requirements the U.S. government is putting on Chinese companies, and China doesn't like that. So their recommendation might be to delist. I think in the long run, as China becomes more and more capitalist and more free and wants more and more access to Western money, that's going to be an issue that's going to resolve itself. And I think now is the time that we have to look at it and say, 10 years from now, am I going to look back at today and say, oh my God, I had an opportunity to buy Alibaba in the low one? In my opinion, that is why I'm buying. Because I look at it saying, Seth, can you pull up the stock analyzer tool?
Sure. I was just going to get to that, Paul, because in the end, when we do stock analyzer tool, we want a larger reward. And these are some of the trials and tribulations we're going to have to go through to get to it. So
yeah, and that's the thing. I mean, to use Paul's marriage analogy, if you get into one fight with your spouse and over a 10-year period, everything else is great, are you going to use that one fight and just say, we're done here? No, this is a long-term play. This is like an investment in a marriage. So if that's what you invested for and that's what you actually believe, that's where you're going to have to get.
And in
you're
the
going to
end,
have bumps along the way.
Yeah, I was going to say, in the end, if you can't handle the bumps, then as we've said on every episode for the past 3 years, just buy an ETF like SPY, put your money there, and you'll be a zillionaire. But if you want a little more risk and reward, this is some of the stuff the headaches you'll have to go through. Go ahead, Paul, with the stock analyzer tool.
So one of our software subscribers just tagged us all three in a note and said, did you see this from China? Spokesperson from China. Recently, some overseas media reported that Chinese regulators will ban overseas listing of companies with VIE structure and demand Chinese companies to delist from U.S. stock exchanges, which is a complete misunderstanding and misinterpretation. As far as we know, some domestic companies are actively communicating with domestic and foreign regulators to seek listing in the U.S. markets. Now, that still does not address the whole technology requirements and the requirements that the U.S. is requiring of Chinese companies being an issue. But the VIE structure that everybody's worried about for so long, they've been pretty adamant about saying if they do change it, it would still be grandfathering in old companies in. I mean, I don't know. In terms of audit oversight cooperation, the CSRC has recently conducted candid and constructive communications with the U.S. SEC and PCAOB to address issues in bilateral cooperation and has made positive progress on several important issues. I mean, I look at this going, okay, if this happens, I mean, listen. Anyways, let's pull up the stock analyzer tool. So, Seth, you did 10-year analysis, low, medium, and high. Seth, do 10, 15, 20.
For the revenue growth?
Yes.
Not too conservative?
Just put 10, 15, and 20. This is my point.
I was going to do 5, 7, 10.
Okay, profit margin. Put 17, 19, 17, 20, and 23.
23, okay.
Same with free cash flow margin.
17, 20, and 23.
PE, 13, 15, 17.
Yep.
Same thing with price of free cash flow.
15 and 17.
Desired annual return, 12.5% across the board.
12.5, and another 12.
The stock is currently at $122. Scroll down.
Oh my God.
That's my point.
What does that mean, Paul, for the
Guys,
new viewers?
What this means is if the company is able to grow 10% a year for the next 10 years, have the lowest end of their profit margin, the lowest end of their free cash flow, only sell for 13 times PE and 13 times free cash flow, it's worth $153 today to us.
Yep.
This is my point, guys. This is my point. I look at this saying, man, good thing is I'm disciplined. I'm never going to go over 2 or 3% unless the stock grows up that much, and I'm not going to sell. I want to own this. I want this to be a company I own for a very, very long time. Now, does that mean it's going to happen for sure? No, but I love these bets. These are bets that, in my opinion, are being skewed by the public and the massive sell-off. Because guess what? When this stock is selling off, any mutual funds and any ETFs that have this, they're going to sit there and say, let's get out. Because they have to get their year-end books set. And they want to be able to say, I didn't have BABA. I didn't have BABA at the year-end. Because people are going to look at the year-end and go, oh, they had BABA. Why the heck did they have BABA? That thing lost half its value, 80% of its value. This is all. I think this is fear selling, and we don't know when fear selling is going to end. The point is, I'm hoping to get a basis in this company where my average price is in the 125 to 150 range. I'm currently above that, but I want to buy at lower prices to get that average price of 125 to 150.
Final take for the average Joes and Janes at home.
This is what value investing is, guys. It's sitting there and determining if a play is just being misinterpreted by the general public. And to me, with all the comments I've gotten from so many random people, I think it's just a play on that. When I started talking to my Merrill Lynch advisor said to me, well, you'll just own the shares in Hong Kong. And your biggest concern is if you sell the shares in Hong Kong, it might take you 3 to 6 weeks to get the money. Oh, well, I don't need the money. Okay, fine. Same with Mo.
I feel the same way. If this is something that you can't handle, then don't do it. It's very simple. That's it.
And guess what, guys?
And don't feel bad if you can't handle it.
Oh,
Nothing wrong with that.
It's difficult. It takes discipline, patience, and a breadth of knowledge that you have to understand.
Yeah, it's not even breadth of knowledge. It's the emotional tolerance of saying, the market's telling me I'm wrong. Am I wrong? The second the market started going down big time, the first thing Mo and I said to each other was, are we wrong?
Yeah.
Of course. That's our first indication, because guess what? 70-80% of value plays aren't really value plays. They're just a big tease. They're a value trap. So this one was like, are we just missing something completely? Listen, it's still overseas. It's still China. It's still the situation where we have to sit there and say, are we missing something here? And I don't think we are. But again, I'm only betting 2 or 3% of my money on it. So if I'm wrong, I might lose 60% of 3%, which means I lose 2%. I'll survive. Onward and upward. For those of you who have a big chunk of your money on there, hey, more power to you, but you're stronger than I am.
That's ballsy.
Because I'm not going to have that. I'm not going to put 20% of my money in one play.
Yeah,
I know Warren Buffett would. Warren Buffett, I believe, in the 50s or 60s, he had 40% of
Amex, was it?
No, it was. I
think it was Amex.
Was it Amex?
Yeah, it was Amex.
You're right. It was Amex.
Yeah.
I wouldn't have done that.
40%.
I wouldn't have done that. So that's my take.
Stay calm. 8-pillar on. If you want the software, click the link below. You can join our community through Patreon or everythingmoney.com. You can have access to the financials of all the companies you want to look for, and you can get the stock analyzer tool, the infamous stock analyzer tool, to let you know what you should be paying for companies. That is our take. Fondle the thumbs up. We will certainly keep you updated as we power through this struggle. Paul will fondle us all the way. Thanks for watching.